The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another wonderful edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, David White. And it's an interesting day. It is, got a small buzz in my headphones. Not exactly sure if it's coming through, but hopefully it sounds good. In fact, give me just 1 second. And let's see, where can I find this thing? There it is. Tool options, audio settings. Well, I don't know what's causing it here. Hopefully it's just in my headphones and everything else sounds great. Anyway, what do we have going on today? Well, today in 1883, spurred by the American Railway Associations, it was the first time we got standardized clocks and standardized time zones across the country. It could be 11:27 a.m. in Omaha, 11:41 a.m. in St. Paul, 11:50 in St. Louis. Basically, the way that they set the clocks until this day in 1883 was a sextant, like they were out there circumnavigating the globe, waiting for the sun to be up actually in the center of the sky. And that was pretty much it. They'd go out and make the noon sighting every day and adjust the clocks. And where you were going, time could be just about anything. I guess that's what Einstein meant when he talked about full relativity, or everything is could be here. Okay, so today was the day we actually got time zone in the United States, and you could start to trust the clock on when your train was going to be leaving. Other things, we're talking a lot about Bitcoin on Friday night show with Tom O'Brien. Certainly it got to 675 today, 691, 671. Of course, not too long ago it was $70. We discussed the ins and outs of Bitcoin. But one of the things I wanted to talk about was bubbles in the past, because we're getting into a market that's acting very, very bubblicious. And I wanted to go back to probably the default case for all bubbles. It was called Tulip Mania. It happened in 1637. And 1637 is when it broke, but it did started about a year before. And there was a tulip bulb that actually had a disease that no longer exists. It actually made the tulips have wonderfully vibrant colors. The technicolor of its day, of course, in 1637, you're about as likely to die of the Black Plague as walk across the street. So life was kind of cheap. Anything that looked neat and interesting had a vibe to it. For the previous year, people had been basically buying and trading these tulip bulbs like Beanie Babies. Another good bubble. The huge difference that actually came into this one was the rapid acceleration at which people started trading these and leveraging and borrowing on their houses and everything else. Like most big bubbles, they get right to the top, and then when they do bust, there's not a bid to be had. The next 2 months saw the price drop almost the next day, 50% on February 5th, 1637, for about 50%. Within 2 months, the bulbs were trading at 1% of their high. And this is not uncommon for the speculative episode. There's a great book out there called A Short History of Financial Euphoria by Ken Galbraith and Kenneth Galbraith. And pretty good. But one of the things we need to know about markets is when they get very, very heated and hot, you're going to start seeing, especially over the stock market, a lot of stocks crack early. We've seen that with Netflix. We've seen it now with Tesla. It was down another $6 or $7 earlier this morning. I haven't looked at it in a little while. But if you don't know your past, you're certainly not going to know your future. This is nothing new. There's 2,000 years of speculative bubbles that have gone on. Everything where everybody thinks that they're going to make incredibly easy money. At the height, one tulip bulb would have given you 200 pounds of wheat, 400 pounds of rye, 4 fat oxen, 8 fat swine, 12 fat sheep, 2 hogsheads of wine. I'm not exactly sure what that is. 3,600 liters of beer. I know what that is. 4,000 pounds of butter. I also know what that is. 1,000 pounds of cheese. A complete bed. Kind of hard to think that a bed would be worth the same price as 3,600 liters of beer. A suite of clothes and a silver drinking cup. I'm not sure if all of these things you could get at the same time, or if this was each. Seems a silver drinking cup would be worth a lot more than 3,600 liters of beer. But I digress. Why that was going on, within 100 years later, there was a gentleman that was thrown out of England. His name was John Law. He went over to France, and he talked them all into basically printing money and printing more money and printing more money. Of course, there was not enough gold to back their cash, so they devalued the gold. Then the gold was devalued. Then the paper money was devalued. 4 years after it all started, his giant scheme to buy huge amounts of land in the Louisiana Territory blew up in his face, bankrupting an entire country. Just about everybody did as many things wrong as possible. But it all started with the printing of cash, and without people, without for things to do with the paper cash. This whole scheme was cooked up to let them put their paper money into something that they could show artificial profits on, that they really didn't have to give anything. The land in Louisiana was a swamp. It was a swamp when they were done. It's still a swamp. None of this actually changed a great deal of anything other than pretty much bankrupting France. The rise over the next 100 years of Britain as the sea power to end all sea powers was pretty much precipitated by John Law going over there and talking everybody into one of the biggest bubbles, national bubbles ever. Of course, at the same time, England had their own problems. They had a thing called the South Sea Company. These people were issuing shares of stock of all kinds of stuff. At the end, they were launching companies promising to reclaim the sunshine from vegetables and build floating mansions to extend Britain's landmass. Everybody was buying these things like mad. But at the same time, as soon as the explosion in France happened, everybody went running for the hills. The exact same thing happened in the South Sea companies. Does it sound like today people are getting awful close to the same thing? Promising to reclaim sunshine from vegetables. I'm trying to figure out how they would have even pitched this thing. But doesn't it sound like a lot of the dot-com bubble stuff that was out there? And some of the stuff now, companies making no money and promising to make money as they go forward. Bitcoin had a blessing by Ben Bernanke. I'm too sexy for this shirt, Ben Bernanke. He did this little walk on the catwalk. Ben Bernanke actually wrote a letter and gave it to Congress. There's a company called Quartz, their news service. Zachary Stewart used to be, I think, on the Wall Street Journal. he read through all of it and said it's a cautious blessing. Of course, the Fed doesn't have the authority to supervise virtual currencies, but they said might hold a long-term promise for the virtual currency, particularly if the innovations promote a faster, more secure, and more efficient payment system. And of course, that's all it took for this thing to go spectacularly higher over the last day or so. So it is another two good questions in the den. A bubble is only identified by looking back. No, I know that we're in a bubble now. Most of the time, you'll get several years in front of a bubble, at least in the stock markets. And it will go back to the mean, if you drew a line over earnings, probably over the last 70 years. Yeah, you'll actually see that the earnings line, in fact, I'll find it during the break. I've shown this chart before of irrational. The markets are almost always, at one point or another, vastly overpriced for the underlying conditions. At some points, they're so overly priced that you get the crash. But if you drew a long-term line underneath the earnings, you'll find out that you go from basically feast to famine. The famine doesn't generally, or hasn't in the past, generally lasted that long. Maybe 1 or 2 years, and then you're right back to growing, and normally within a year you're back to that median line that comes back up. How is today any different? It isn't. People always think that they're smarter than the market. It's always good to have a decent fear of it. My guess is that the exact same thing that happened with the tulip bulbs will happen with Bitcoin. That is, it'll be whatever it is, $1 million of Bitcoin. And the 5 seconds later, no one will be able to get or sell one. And the price will drop at 50%, and they still won't be able to sell one. And then that will be it. But the issue on all these bubbles, if you want to trade them, is once you've made some money, and even big money, take it. It's pretty easy to know that none of these companies that we see now, like Tesla, we knew that it was going to add 180, 190 bucks a share. It would have grown for 10 years before it would have been worth what everybody was paying for it at $190. Those are pretty easy things to see. You don't have to look backwards. You can look right now. Are you going to wait for 10 years to make a dime and pay that kind of price for a stock today? Especially when you know that they have, it's fairly easy to go back and figure out the weaknesses with the Tesla business model. And I've gone through them ad nauseum, so I won't bring them back up again. But no, I see bubbles all the time. In fact, we'll talk about it when we come back. But Tom and I were talking, I think, in 2001 or 2002 about the housing bubble. I mean, we could see it 5 years off coming, and we talked about it several times in a little restaurant right up from his office. Kind of remember those discussions about what was going to make it bust. We'll be back in a minute.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we talk about bubbles, just a reminder, my favorite convicted insider trader, George Soros, said all of economic history is one lie and deceit after another. Your job as a speculator is to get on when the lie is being propagated and get off before it's discovered. A rather jaded view of the stock markets, but probably one that you must have to continue making money in the market. If you don't believe that you're always on borrowed time, as especially some of these bubblicious markets are, probably not going to make it long term. Tiny Tim Geithner will be joining a private equity firm, Warburg Pincus, making the circular round trip between government and back to a business. And kind of interesting that he wasn't able to get any better firm than Warburg Pincus. Maybe there's some things I don't know about, but you'd think that old Tim would be able to go back to Goldman Sachs or J.P. Morgan or something like that. You never know. MF Global. We talked about this in the den a little bit earlier. Of course, we had some friends that worked there. I used to be on TFNN. Very good friends. But one of the problems was that MF Global went belly up. And, of course, left a lot of people in the lurch. The federal court in New York ordered MF Global Incorporated through its bankruptcy to pay the over $1 billion in restitution to customers of MF Global Incorporated. Of course, when this thing went bankrupt, no one could find the cash. Apparently, it has been resurrected from somewhere. My guess is that there was a lot of money shoved to various companies. And anybody that's gone through been on the opposite side of a company that's gone bankrupt knows that any kind of payments within the last 90 days normally can be called preferential payments, i.e. you want to go to work for company X, so you make sure and you write a lot, you make sure that company X gets their money before you go bankrupt. So they probably were able to withdraw a great deal of that cash back in. It's very unclear, other than last week, that there was a filing from the court that actually said that they had found $1.3 billion that was, quote, missing, that no one could find in the early days of them going bankrupt. I suspect that them finding all this money had a lot to do with personal lawsuits against the former governor and former CEO of MF Global. In a civil case, not a criminal case, you don't. They can ask you any kind of question they want, like what kind of color loafers do you like? And I have a feeling that they were getting so close to Mr. Corzine that someone figured out a way to get them paid off. I'm sure he knows where a lot of dead bodies are buried, and I don't think the people in Washington, D.C. wanted that coming out. So I have a feeling that everybody ponied up, made sure that there's enough cash for it to go away. And of course, if you didn't lose any money, then how can you sue Mr. Corzine? You might sue him for the loss of money over time. But if they get their cash back, the chances of getting any big settlement out of Corzine are slim to none. He had been selling everything that he had, getting ready for these court cases. My guess is that no one would have ever seen a dime out of him if they had gone forward. But they would have been able to publicly embarrass him over a multitude of documents that came out of the MF Global case. And maybe the reason why everybody gets their money back. Kind of like old O.J. Simpson losing the case in civil court because they actually knew the correct questions to ask instead of the silly ones that were asked in the criminal case. But that's going to be the thing. But that's my theory. I'm sticking to it. Of course, we're going to get into some charts and some other stuff before the end of the day here. But you can always give me a call at 877-927-6648, 877-927-6648. We'd like to, we got a market that's kind of flat, kind of like Friday, 1,800 on the S&P cash. You've got still under 2 billion shares on the consolidated New York Stock Exchange tape. In fact, I guess I better update that just to make sure. I don't think I updated it in a couple of minutes. And let's see where I've got it. Yeah, just at 2 billion shares on the consolidated tape. Options roll over today and tomorrow. We're probably going to see the market really start moving on Wednesday. And we'll talk about that and so much more. And we've got John Galt as a guest today. So we'll be back in just a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we get by, there's a list by several people on the internet. It is an unofficial problem bank list. I've been watching this for a great deal of time. Let's see if I can actually try to tell you where it actually comes from. Where's my email? Oh, there it is. Yeah, let's see. Trying to remember where this thing is from. Been watching it for at least a year and a half. I'll think about it here in a little while. Anyway, it is a official problem bank list from the Fed and FDIC. They're going to be releasing an official list over the next week. But in the last year, the list has gone from about 950 institutions to about 655 institutions. These are all small, for the most part, local banks. But still a great deal of these probably going to find them themselves probably after Christmas being bought out and liquidated by the FDIC and the government. But off 300 and last year, not too bad. They're actually whittling it down. Unfortunately, once you whittle all the other ones down, you're left with the incredibly dead wood that's left. But look for a lot of these banks to have issues. They've got a lot of notes on retail property that is not paying off. And I suspect right after we see the first of the year, we're going to see the new Fed president work with the FDIC and getting rid of the rest of these problem banks that don't have a lot to do with retail. I don't want to call it retail properties, but I mean they are. They're retail properties. They're not homes. But still a great deal of problem out there, and a great deal of these banks have loans on strip malls. Several around here I drive by, must be 200 yards long, totally empty. They've all been cleaned up and cleaned out. One has one small store, probably 1,500 square feet maybe, that's a liquor store. The rest of the 600 yards or so of the mall, I think it's got a Subway sitting out in the parking lot, but pretty vacant properties all over the area, and most of those are the ones that are still having notes from the local banks. But I suspect we're going to start seeing those roll out in the right after the beginning of the year. It's one of the more interesting things I saw over the weekend is the FBI has issued a warning to several U.S. government agencies that hackers are back at it. They've been in every one of the government's websites and services. But these include U.S. Army, Department of Energy, Department of Health and Human Services, and potentially many more agencies. But apparently they've already cracked the new Obamacare website. Why they're not actually saying, it just looks like anybody that has put any data on any of the websites is probably should make sure and check your credit scores, because apparently it is leaky as a sieve. The problem seems to be Adobe Cold Fusion. There's a new hack out, and the government's a big fan of Cold Fusion websites, and made it very easy to get a lot of that data out. We talked about this last week. Bloomberg had been spiking stories about China so that they could stay in China and not get thrown out like Google did. Interestingly enough, they are blaming the reporter for leaking the story about Bloomberg spiking the story, and they canned him over the weekend. I guess he was suspended last week, but I guess he's not coming back from what I read earlier. There's a lot of IPOs this week. We're going to get into that in just a second, go through a few of them. I did find this chart over the weekend that was very nice from RBC Capital Markets. And it shows the trading volumes from the New York Stock Exchange. We see the peak right there at 07. Of course, a lot of volume is coming down over time because of the ECNs, people trading off the New York Stock Exchange. What we do know, though, is the ratio has been about the same, which is somewhere around 28 to 31% of the shares on the New York Stock Exchange are traded across the floor. The rest are on ECNs. And that has remained pretty much the same since about 2009. So there's not, even though this chart only looks at the floor traded shares, that ratio has pretty much stayed consistent, which is showing us just how far a 3-month moving average of volume has moved down, and how light the volume is up at these highs. So just a thought out here. See if anything else is going on out here. We hadn't really talked about gold yet. I wanted to get into that, so let's get out of this and start moving into some markets. Friday we were discussing it, and even earlier in the week I kept on thinking that we're going to see these lows in gold tested, especially in a lot of the miners. And let me just clean this up a little bit here. Certainly looks like we're coming down. Volume not incredibly strong today, but we're bouncing all over that 1272 level on the gold contract. We're off about 15 or 16 points right now on gold. Energy is not that great, but I suspect what we're looking for in the gold market is a light volume retrace back down to that 1200 level. I don't know if it's going to get down to that 1180 level. I would certainly love to see it get to 1180 and maybe even crash down to 1100 and then start picking up the long-term position on gold. But I still think that's what we've been looking for. I didn't buy it the first time off the bottom. I would have for a trade, but for a multi-year investment, I've been still waiting for gold to come back and hit one more low spot. Could this be the bottom? It technically could be. I dislike something that you can't really put into technicals, which is the belief that gold can't shake everybody out one more time. I think it certainly could. Of course, we didn't get much of a bounce this last time, right back down to the support level, which makes me think that this thing could fairly easily crack. The dollar index, of course, off about 13 cents. It's been staying rather steady around that level, but going to be tough. Anyway, when we look at the GLD, it did the right thing. It automatically rallied when we tested the last October 11th low at 121.85. That had 15 million shares. You get a test of 50%, you're going to get a bounce. The volume and the energy off this last leg has started to pull back a little bit. But every time I've seen a long term, and I might just mean a month, but multi-year lows in gold, and I think when it first took off, I think it was 2004, when the thing came back real hard. Everybody hated me when I was buying it. Didn't want to talk about gold anymore in the den or anything else. I think it was 2004 or 5, maybe what it was. And that was actually the time. So look at your brethren a lot. When they get so disgusted with gold that they won't even talk about it, probably a good time to actually think that there may be a long-term bottom in gold, not just a tradable low, which was, I think, what we got here. There's still the low out on the GLD at 114.68. I don't know if we're going to get that, but I think we could certainly get back under 120 and maybe even 119, 118 back in here, and then have such light volume that we accelerate right off those lows going back to June 28th this year. So just keep an eye on it. Laughing out loud. Television. Okay. What else do we have? I want to look at a few other things out here. Tesla was weak. We talked about that earlier in the show. TSLA. And whether or not you can actually tell a bubble. I think you certainly can. The question is, what is the long-term outlook for a business? And if you can go through the business plan of a business and say, okay, they're making 20% on every car now, which is unheard of. Every other manufacturer is making about 5 or 6% gross margins on cars. So they're making 20%. How long will that hold up? Will the other car manufacturers all learn to make 20%? The answer is probably no. Tesla had a sweet deal where they were selling direct to consumers. No other manufacturer gets to do that. My guess is that all the manufacturers will either start doing it, or more likely, Tesla was going to get moved out by law in those states, the 14 states that they actually do sell the cars in. My guess is now that Tesla is actually going to have to probably have standardized dealerships with service facilities in them, and that will eat dramatically into their forward earnings. The other things that we can see in Tesla was that they were priced as if they were selling 350,000 cars a year. And at that same 25, 26% margin that they probably couldn't ever catch. So let's say that they went to a 12% margin. That meant that they would probably have to sell more like 1 million cars. And, of course, it just gets ludicrous after that. What we do know is all the money that they made on the secondary that started about, $70, $75, pretty much is going to be used up in the first couple of years to build factories just to get them to 100,000 cars a year. So they will be out of probably a lot of extra cash within a year, year and a half after these factories are built. and they'll probably have to come back one more time and dilute the shares of stock out here. So not uncommon that this thing broke apart fairly early, coming back down. Volume is strong to date, 16 million shares. Certainly going back through the last couple of highs. They're at 114.90. There's a 25 million share spike. But this thing could get all the way back to $97 without much problem, which was just the May 14th low this year. Or actually May 14th high. It spiked and ran up into those dates. I would not be surprised that it gets into that $97 range and post haste. Point about Anita, similar plan. I don't know. Is that a question, Z? I can't really tell in the den there. Anyway, you can give me a call at 877-927-6648. I want to look at a few other stocks that have been being pushed by the market. One is IBM. This thing came down on heavy volume. It's popped right back up to the gap. I've been watching this one very close. Not a lot of energy out here. More likely, this thing is setting up some form of the next ABC down. Let's take a quick look at that. 194. There it would be. It's done a 50% retracement to this heavy volume gap down. Volume has been rather weak over the last 2 or 3 days. The next ABC setup in IBM would take us back down to 161.73. Can we, we're getting awful close to the end of the year. Normally by somewhere around the 1st or 2nd of December, we'll find that if people haven't already started selling for tax reasons or selling to take their cash, they can run the clock out until the end of the year. Of course, no one got fired forever at a stock broker probably for buying IBM. I suspect that every time it goes down, they buy it back again. There's a considerable amount of share buybacks from IBM, and who knows if this whole leg back from 172.57 isn't that. And what else do we have? Wanted to look at Apple. Apple is having manufacturing problems, still having manufacturing problems. And, of course, not moving very much since last week's heavy volume down day. It's been pretty much trading in that range since then. When we look at Apple up here, it went higher. There wasn't a lot of energy into it. Even when we saw Icon's filings, I think last Wednesday and Thursday, that showed that he increased, I think, another 20% more in the shares that he covered. Really didn't do a lot for the stock. What we do know is we've had a nice ABC. This thing's pretty much completed that ABC up. And now we're getting what happens when you complete an ABC. One of two things. It either goes sideways or it starts pulling back. And at this point, light volume, a little bit stronger volume today. But, of course, we do have one more day of options expiration rollover. And at that point is when we're probably going to really find out Wednesday which way this market is going to break. But let's see, expansions. See, we have, this thing could, 1-to-1 would have taken us up to 572, so I guess we're still way short of that. Just kind of looked like it would be that. We actually got up into this gap. That gap happened on the 3rd of January, and this thing's rolled over and gone sideways. But volume picking up today, even though we're just a little bit farther down. Apple itself having problems with manufacturing. Doesn't look like they're going to be getting along any faster anytime soon. Anyway, give me a ring, 877-927-6648. And, of course, we've got John Galt coming up.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi. I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Oh man, do I wish you were here. What a great album. Boy, if you're not a fan of Pink Floyd, you're just not a fan of music. That's what I gotta say. Anyway, going to look at a few charts here before the end of the day. Just noticing a few things that are kind of interesting, at least to me. One of them is the CME group. This thing has been testing its previous high over the last couple of days. June 20th, $79.45. 4.8 million shares. We see this thing a breakthrough on 1.1 million shares. And just not a whole lot of issue. This thing has been consolidating, but this is the test out here. It is not the only stock out here in that area that is testing its high. We see E-Trade Financial, ETFC, also doing a kind of a similar thing. It tested its 7.5 million share high, $17.73, at 7.5 million shares with 3.6 million shares. So it's not that just one of these stocks is doing it, but we have a lot of weakness in various stocks. Notice that Valspar is another one out here that we can take a quick look at. Of course, they're the big paint company, and should tell us a lot about what's happening in renewals of existing properties, how much paint people are using out here. But interesting to see the August 12th high at 71.32 with 1 million shares, tiptoe through the tulips, 50 cents higher than that today. But closed back under it with 480,000 shares. I will not be surprised to see the market kind of push down tomorrow. And of course, this is all about options rollover. Actually, through January, it is not uncommon to find a lot of option positions being pushed out to the market because, of course, after about 2-3 weeks from now, the volatility will almost certainly drop into the end of the year. And it'll always be interesting to see that. But if you're buying options, they pretty much start rotting the first week of December with the drop in volatility, almost always just a nickel and dime higher into Christmas Day. I don't think that we're going to have a big Christmas Santa Claus rally at the very end of the year. We've had pretty much everything one could ask for already. But enough stocks out here giving some warning signs. And, of course, nothing like Netflix that's already fallen off, NFLX. When we see this thing kind of really move, it's been back up to, what, 3? Oh, that's not correct, is it? Let's try it again here. You should get to today's. Not pulling it today. What was get a? Should be able. I'm having all kinds of technical difficulties here. Well, we're out of time today anyway. But take a look at Netflix. It's pretty much setting up what I think is a ABC down in this. Energy has been fairly light back up. Hang on a second. NFLX. Oh, we're out of time already anyway. And we ran out of time, so we're not going to have John Galt on today. Who is John Galt? Well, tune in tomorrow and find out. Everybody knows who John Galt is, doesn't they? Anyway, we'll be back with you tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.